Federal Reserve Chair Jerome Powell prepares to give a big speech on Friday. What he says can impact mortgage rates, credit card interest, and your savings. And financial expert Terry Savage joins us now with more on that. Terry, is that going to be a big deal?
It will be a big deal. We don't know what he'll say, and everybody thinks he'll say, well, we're watching it very closely, and we'll probably have to see what the data is in the next month or two. But I looked up some numbers. It's fascinating, hard to, even for me, and I follow this. Last year at this annual Jackson Hole retreat meeting that the Fed has, inflation was 8.3%. Now it's down to 3.2%. So their rate increases, and there have been many of them over the last year, have been working. The question is, have we seen the final results, or will the economy now be slowing as a result of those previous increases? Are they going to wait and see? Maybe job growth is slowing. Surely home sales are slowing, and consumers, there's some signs of weakness in the retailers. So this is a guessing game. Nobody has a magic formula, but everybody thinks of Jerome Powell as the Wizard of Oz, who's got the answer. We'll see what he says Friday.
All right. In the meantime, let's get to some viewer questions. This person says, my 33-year-old son needs a financial advisor. He needs to consolidate and grow a retirement plan, but he needs to learn and work with an advisor. What should he do?
I'm kind of laughing a little bit. That's nice, Mom. I'm glad you wrote me. I would have felt better if he had posted this question.
Because he's 33. But I'm
going to give you, because the person has to be motivated. And boy, a great time to start working with a financial advisor is when you're in your 30s, because time leverages money, and smart advice at that point can make all the difference. I always recommend wealthramp.com, where you will be matched, connected with a fee-only financial advisor, a fiduciary advisor. And a reminder, this is not just about how do I invest or how do I open an IRA or so forth. It's about your whole life. I mean, at this stage, he may not need life insurance, but perhaps if he has a family or is starting one, that might be part of it. Other aspects of life. So a real big financial plan, but with someone who's not trying to sell you something. Wealthramp.com is where you go to get matched.
All right. This person says, I'm selling my secondary residence and will be gaining a profit. What would be the best way to invest this money?
Yeah, these questions, they're fraught here. Do you want to invest the money, or do you want to keep it safe? How much are you willing to lose? If you say to me, no, that I really needed that money, then right now you go buy U.S. Treasury bills, 6 months, paying 5.5%. You can go to treasurydirect.gov to do that. If you go to terrysavage.com, on the right-hand side of the homepage, scroll down, there's a box that says how to buy Treasury bills. Safest investment IOUs from the federal government. But if you really meant invest, that means what else do you have to invest? What's your IRA? What's your 401k at work? That's when you too could use WealthRamp and find a financial advisor that might give you some different directions. But to keep it safe, chicken money, Treasury bills, 5.5%.
All right. Is it best to pay off a home mortgage early or continue to pay a 30-year term?
Another trick question. Who's sending these questions in? Always, and for years, I always said, pay off your mortgage before you retire. But 3, maybe 4 years ago, I started, you remember, Robin, we were talking about, I kept saying, lock in your mortgage, 30 years at 3.25%, 3.5%, even though you think you may not last that long, because I knew those rates would be a gift. So if you have a low rate mortgage, under 5%, hang on to that mortgage, because obviously you can earn more just in something safe like T-bills. And now the advice is, depends on your mortgage rate. Don't give away a great low mortgage.
All right. And this person says, I need about $5,000 to $10,000 for some home improvements. The house is paid off. Is it best to withdraw from my 401k or IRA? I am 65 and still working full time.
Okay, a couple of parts to this. Number one, if you're still working full time, you probably cannot withdraw from your 401k. You may take a loan, but that's silly, because why give up that tax deferred money working for you? Your IRA, you can make a withdrawal. You're past the penalty stage, but you're going to have to pay ordinary income taxes on whatever you withdraw. That money could be working for you as well, and you'll have to withdraw extra to pay the taxes. You might check out a home equity line of credit or a home equity loan. The rates will be higher, and you may have a balloon payment at the end. So it depends on your circumstances, and you have to make those improvements now. If we have a recession, there may be a lot more carpenters and plumbers and home builder type people looking for jobs. So it might cost less down the road.
All right, this person says, which is the best auction date and time date to purchase T-bills? Should I reinvest or do a one-time thing?
Okay, we're getting technical now, but it's really very easy. When you open your account at treasurydirect.gov, you need your name, address, social security number, your bank with the checking or money market account, and the bank routing number. That's all. Then you click on, I want to buy 26-week treasury bills, and it'll show you all the auction dates for the next few months. You want to buy the next coming up auction date for those treasury bills, 26-week or 13 weeks. And then you get a chance. Do I want to schedule automatic reinvestments? So when they mature in 6 months or 3 months, they'll automatically renew at the then current rate. If you know you won't be needing the money that soon, just check 2 or 3 automatic reinvestments so you don't have to worry. The interest at that point will drop right back into your checking account. Chicken money, T-bills.
Let me ask you though, Terry, some people are, when they hear you're investing IOUs with the government, I mean, people are kind of like, really? The government's not known for taking care of my money.
The government is, no doubt that we have federal budget problems, but the entire global world thinks that the safest place to put their money is in U.S. government treasury bills, short-term, 3 or 6 months. So maybe down the road, we're going to have huge budget problems. Do not worry about the government paying its treasury bills. Remember, you can't do this, but the government can print the money to pay you.
All right. To ask Terry a question, go to terrysavage.com. Thanks, Terry.
Thanks, Robin.
Time now for Around Town. Miss Anna's birthday, and we sent her to school.